Good day, everyone, and welcome to Wednesday live trading session. As you know, we are expecting ECB's President Draghi to speak, so it might get a bit volatile, but let's see, we might have some trade soon. So before we start with live trade setups or live trading, first we go with risk disclaimer. Explain the CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. So these are not suitable for everyone. Presentation and this video is for informational and educational purposes only. And have in mind that this video is not part of the .co.uk website, but the globaluse.com website. So before we proceed, you can go to read the full disclaimer at this web address. Okay, so as I say, we are expecting some volatility now, especially on euro crosses. Euro dollar might get volatile now, but let's see. President Draghi will soon start to speak, so we definitely need to be ready. Okay, guys, let's see. I will open my chart. I have prepared a sell on euro dollar. It should be a good risk to reward. So here I will show you how I made it. And the reasoning, this is basically counter trend trading opportunity. Here you can see we have sell limit order 1.1229. Stop loss will go slightly above 1268, so it can be 1270. So let's see if we get a sell trade. As I say, this could be a little bit risky simply because we have a ECB president. Yeah, obviously the conference has started now. I'm also monitoring some websites to see what's going on in the market. Okay, we need to have full update at this point. So this is my sell order opportunity here. So waiting for euro dollar to hit this level. I will show you before I go with rules and setups. So first of all, we use POC zones, master candle setups, Woolways, price action. All of this is my personal opinion and trades. We use market order or pending orders, okay? If we don't see a setup, it's simple. We don't trade. We don't scalp here. We are making positional trades. We also do positional breakout trading. If we don't see a setup during this full hour, we don't trade. You need to learn patience. You need to be very patient. Simply because market is maybe moving or not, it doesn't mean that we should jump into a fright train. We want to see something that is viable. Once you're in trade, you need to do your own trade management. And if you watch previous week Wednesday live session, you saw that there were some nice opportunities and that we indeed made some pips. Recommended risk 0.5 to 1% per trade, only see 2%. You want to trade like professionals. Losing is part of the business. Keep your risk under control. Session recaps are Monday, Wednesday. Pending orders are valid from Wednesday to Friday. Friday, don't forget, Friday is day to take profits. So these setups are for today and until Friday. And yes, FOMC today also, guys. So that is why I would like to make a trade today and close the trade before FOMC. That is what I would like to see today. So we need to be careful, guys, okay? You need to be careful. You need to be ready for market movement. And FOMC later today can also move the price. So I would advise that if we make a trade during this hour, better is to protect. I mean, not better, but 100% before FOMC, be sure to protect your trade. That means putting your stop loss to break even or scaling out and putting the rest to break even. You need to manage your money that you ensure profits. I also started to trade a bit higher account now with Admiral Markets, and I'm in process of trading a bit higher account also. And I will show you once let's say in a month or two, when I make some result, I will make a blog and I will explain how a good money management is the holy grail. Again, is the holy grail in forex trading, and how you can be constantly profitable. If not, I mean, when I say constantly profitable, I don't think every single trade or every single month. But let's say when you take an average of 3, 6, or a year or 2 years, you should be profitable if you know how to manage your risk and your money. Okay, that is why I'm very keen, and that is what I always do. I use profit stops. Profit stops are a way that you can ensure profits even if price starts to move violently. Okay, so very important, guys, for you to know that. Again, I know that a lot of people are watching the webinar, and also a lot of people are actually seeing me trading live. Okay, and I need to say, whatever, if you're a new trader or experienced trader, it's simply, guys, it doesn't matter. The point is the same. Holy grail in forex trading is called money management. We need to have good entries, of course, but definitely it's the money management. Okay, we have a potential trade on sell trade on euro dollar, but I'm contemplating at this point whether we should actually maybe try to short euro dollar, but then again we need to move a stop loss. This could be a POC 2 zone. Let me think. I would like personally to sell euro dollar higher, but from this spot, euro dollar can also move downside. So that is why I'm thinking to maybe short euro dollar and use some stop loss of some 50 pips. Okay, so or 60. Yeah, we can actually maybe try to do that, and then I will remove the sell limit order. Although, guys, if you watch here, I will show you now. If you watch here, you see it's definitely a much better place to short, because you know how I teach you. I teach you to trade at the top of the right shoulder, but if you see the confluence is also here. This is head and shoulders, and this could be a counter trend trading opportunity. We also see a divergence here. We can see some divergence that is playing out here. Okay, and yet again, CCI is overbought at this point. So definitely for this, if we want to short it at this point, we then need to move our stop loss a little bit higher. So what I would do, I would actually, yeah, I will confirm the trade. Okay, it's pound dollar buy trade. Although, guys, here I'm buying this now. It doesn't matter. I will use only 22 pips stop loss. Okay. Okay, guys. Here it goes. Pound dollar has been bought. You can actually try to, if you want to trade this, I mean, for me, this is a potentially good risk to reward and potentially good trade. If I am stopped out on this trade, it will be really, it's a very low risk, very low risk for this trade, and we might see something if the price goes in our favor. So let's see. At this spot, it's 29.68. Stop loss is 29.45. Only 23 pips of a stop loss. Really, it's not that big. So my target is, I would aim personally slightly above this range. Now, guys, if you trade master candle setup, this would have been a master candle breakout trade to the upside. But the main thing with pound dollar is that it's kept in the range. This slide, Martin originally showed 29.60, 29.45 stop loss, only 15 pips. 30.10 is TP. But I actually entered the trade, a trade of buy pound dollar at 29.68. 29.45 is stop loss. I will be waiting for price to move to the upside. These are pivot points, or stop me out. Guys, I always teach you to trade relaxed. So if I'm stopped out, I'm not concerned. If you notice, if you read between the lines, every single of my analysis is usually very, very, very clear. POC zones are zones where we buy. If you read the analysis, you can also conclude where TP and stop loss is. On these live webinars, including session recaps, everything is clear, right? You have clear TP, clear stop loss. For this trade, my stop loss is 29.45. So let's see. Sell trade on euro dollar. I will be waiting for a sell trade on euro dollar. This is my sell setup. So 12.28. Okay, it's 12.28. This is the slide. 12.28, 12.30. Okay, 1.1275 is stop loss, and I will be aiming for 1.1060. Keep in mind that if we see a close on euro dollar, if we see any close below this spot here, and it implies 1.1170, I think. Yes, any close of price, keep in mind, now everyone, every close of price below this line will be a sign of further weakness in the pair, and euro dollar should proceed down. You need to know that. What I would like to see is a sell trade at this spot here, because this is head and shoulders. Left shoulder, head, right shoulder. Bearish SHS pattern. Bearish pattern can usually appear at the top of the market. Here, if we place Fibonacci retracement tool from the previous swing high to the current swing low, we can see that my sell spot is in a great confluence with ATR yellow pivot point H4, 61.8, and also here we have near-term sellers. So I expect, if the price gets there, I expect these near-term historical sellers in a confluence with this, and also a right shoulder. This will be right shoulder. Then what I would do is I would sell here, make my stop loss. I mean, I also have a pending sell, but also here I will place a stop loss at 75. Maybe I will adjust it a little bit higher, maybe 4 or 5 pips maximum. But then what will happen? If the price breaks 111.70, I will go short on rallies. Remember, guys, how I teach you to trade. Whenever a daily low or high is broken, short at the first rally. So if we miss this trade, and if this low is taken out, then on next retracement, I will sell it. Right? You remember what I teach you. After the break of daily high, sell on the buy on the first dip. After the break of daily low, sell on the first rally. And the accent, the focus is the first, right? It means very first, not the second or third rally. The very first rally. For the very first rally, I like to watch, let's say, 1 hour or 15-minute time frame. So we will zoom into lower time frame if euro dollar gets a dip below 111.70, and then we will sell it at the first rally. Now let's see what the market is telling us. I'm trying to watch some news here. It says that ECB remains vigilant on financial stability risks, and the president of ECB is speaking currently in Spain, Madrid, okay? And well, I don't see anything particular here. Definitely nothing very important. And there is also reflected on our charts. We don't see any substantial movement now on euro dollar. So we are actually waiting for something to happen. Here on pound dollar, I made a long trade, small long trade, 29.68. We have a stop loss is 29.45. This is a master candle range. If this breaks out, 30.10 should be my profit, and let's see what will happen. If pound dollar and euro dollar are moving in a sort of correlation, then definitely we should see something here. Okay, then we could see a spike in pound dollar, and then I can sell a euro dollar later. Euro dollar and pound dollar 86. Yes, indeed. But let's see. We need it. There is a positive correlation, definitely. But definitely, as I say, we need to wait. Okay, I will now open mini terminal also. So my entry was 29.68. 29.45 is stop, close, stop. So guys, I really, as you can see, if it wants to stop me, it will stop me, because this could be M pattern here. So if it wants to go down, it could stop me out. But as I say, the risk is what matters, not just on small accounts, but also on a bigger accounts. If you know how to manage your risk, if you trade with low risk, by using good entries, if you're 70% successful in picking up entries, you should be positive. And that is what I also will show also on some higher accounts. But at this point, let's focus on these trades. So now the price is going from neutral. You see how ECS box indicator is changing colors. When you see a switch of color from blue to gray, it means that the day is neutral. When you see the color switch to yellow, this kind of yellowish color, it means that the day is bearish. And at this price, we see that the day is still bullish. And this is a good indicator because it also shows you daily low and daily high. So I assume once if the price, of course, breaks to the upside, then the pound will be bullish and may proceed to the final ATR projection for this day that says 30.35. But as I say, I rarely go for full ATR projection, simply because we are trading intraday. Of course, guys, and for me, the best money is made by trading intraday. I am a guy of action. I am a trader that likes action, always keeping safe risk. So my plan is always to try to exploit good trading opportunities without risking much. And when I gain slowly but steady. That's the main principle how I trade. I am not aiming to become rich overnight, although the word rich is very subjective, right? People who have 200, 300, 500,000 euros or dollars in their account are not rich. For some people who have millions and so on, it doesn't matter. The point is clear. Whenever it doesn't matter if you have money or you have your job or you want to invest $1 million or $2 million in trading forex. The point is, even if you are rich, you don't need to aim to be even more rich in a single day. That won't happen. That's just a lady luck. Okay, so the point is you need to go step by step, as I'm showing you to trade. I also trade on low accounts, but I also trade on bigger accounts like 50 or 1,000, 100,000 euros. So for me, it doesn't. I really, it's the same for me. Trading on 500 or 100 euros or with 100,000 euros, because I know how to do my own money management, and I am sticking to that principle. And I hope in a month or two, when my account, bigger account, hopefully is pushed up, you will see when how you can trade with just with good money management. Even though if you trade, let's say, some riskier entry, like making some trades, news trading or something like that, because I rarely trade news, but from time to time I trade news. But when I put my system of money management in place, that ensures good trades. And I also will show you an example how with good money management you can make it out, but you need to pay attention to risk and maximal drawdown. Martin is saying FOMC minutes in 5 hours, so we have a while to go. Indeed. Now, this what happens at this point simply has nothing to do with FOMC. We still have a while to go. As you can see, pound dollar is at now on my original buy spot. As you can see, very, very low stop loss. Well, that's the opportunity I would try to take. 15 pip stop, but watch at this TP, 50. So the risk to reward is almost 1.3, right? Slightly higher. That's great. So if I'm stopped out, I will only lose 15 pips. But then again, my risk for this trade is very small. So what I can gain is much higher than what I can lose. So let's wait. Let's see. Again, I'm because President Draghi didn't move the price. I'm still contemplating whether I should try a sell trade here. But then if I sell, you need to know that the stop loss should go, let me just measure something. Definitely at 12.50.51 if we sell. So it will be a 60 pip stop loss. But then I would leave a trade overnight. That could be a problem because we will have FOMC risk ahead of trading. That is what I don't like at this point with this setup. Although, guys, this is also POC zone here because it's 38.2. It is at top of the left shoulder. This is head and shoulders pattern formed. You see, it's trying to go down. Very, very very, I need to say very attractive trade, possibly to sell here, to put a stop loss there, aiming for 1080, 1050 even. But what I'm afraid of is FOMC. The only thing what can stop me out is a sudden spike on FOMC, and then the price might start to reverse. That is what I would not like to see. So that is why I will definitely wait with this setup. I'm not going into anything. I have my pound dollar trade, very small trade. As you can see, it might go and hit stop loss, but it shouldn't be a problem if your risk is less than 1%, and mine surely is. Now the price started to move a bit. Obviously, Mr. Draghi is speaking. Something is happening in the market, or yeah, there is some news. I need to see its price, house price index. Okay, yeah, it's moving the price a bit. Nothing so fast. Nothing that can be overridden by a good money management. Yet again, we need to wait for the price to come to us. Yeah, this euro dollar really looks tempting to me. Really, I need to say. Derek, I wouldn't be buying euro dollar at this spot. Maybe at around 1.1090, something like that. because the problem is FOMC. It's the main problem. FOMC is the main problem why I didn't make a euro dollar trade at this point. I would really like to see FOMC beforehand. But I would probably leave my pending order. If it's not hit, I would leave my pending sell order. So yeah, let's wait. Let's be patient. Don't hurry in trades. Uh, you need to have the logic for your trade. For me, the logic behind this setup here is pretty much. I will show you right away. You can see it here on my screen. It's master candle setup. Also here you can see this looks like a big flag here. See the pole, the price down, it's a correction in the bullish flag, right? So for me, this was the logic to make a pound dollar buy trading opportunity. And another logic is because if I'm stopped out, you see how the range, how the first test of this support was successful. I'm not saying that it will not break down and hit my stop loss. But you see my logic. This is M pattern. This is bullish. This is big flag here. And this is confluence spot. 618, the bottom of master candle, ATR pivot point. So really, if I'm stopped out, it will be so small. You know what I did when I started to trade? I did what most people do each day. They usually sell or buy without using a stop loss. For me, using a stop loss is an art. It's a must. It's a work of art. Because by using stop loss, you're actually using your money management. You are stopping further losses. So I really advise you to use stop loss, because then if you do it, you will learn how to trade properly. Without a stop loss, you're subject to random market movement, and you simply don't trade rationally. The other way when not to use the stop loss is only if you have a robot or something that works with your own money management. So let's say that on my other account, I know what should be done. And I have programmed a robot, an expert advisor that works how I like to work, with strict money management. Only then I don't need to use stop loss. But my risk, again, a complete drawdown of the account should not exceed 20%. If it exceeds 20%, an expert advisor will close all of my orders. For that, you need to either have your platform, your PC turned on 24 hours per day, but it's much easier to use a virtual private server. You can go here and you can purchase, you pay monthly fee for that, and VPS. And by using a VPS, you can actually ensure that your robot or your trades will always be respected. Okay, that means that you're renting a private server. Okay, and that means that it's like your PC is turned on 24 hours per day. Okay, that's very important. But you need to rent it actually. You need to register a virtual server. Okay? And if you do that, well, then you can use robots and whatever strategies you want to employ. Because as you know, robots simply don't work if you don't have a running platform or you don't run a virtual private server. At this point, you can see that pound dollar is rejecting. But well, this is a long day, so we will need to wait. Euro dollar makes a very slow grind towards my sell spot, but actually now at this point, it does nothing really. It's simply moving up and down, so we need to wait. And until then, we will be scanning for some other trading opportunities. Of course, we will not be trading CAD, because CAD will have a Bank of Canada rate statement very, very soon in 45 minutes. So overnight rate and crude oil inventories in an hour and 15 minutes. So very, very, now the market can get volatile. We don't want to make unnecessary risk. But guys, just to let you know, I will keep this sell limit trade on FOMC also. The point in trading is how much you are willing to lose. Remember that. Now I'm really trying to instill a professional knowledge in your mind. The point of trading, the first principle, how much are you willing to lose? Only then you can afford couple of trades, and even if they go in a stop loss, if your risk is low, you will easily come out next day if you have a good method to spot entries. And good method is my Camarilla MACD. Camarilla MACD is my professional baby, I need to say, that I've been working really on since 2012. And it's a natural evolution of my practical naked trading or PNT method. And most of the principles I explain in price action trading school, but of course, I always provide you with setups. They're strictly related to Camarilla MACD method, and you can see it on my session recap, live trading room, and daily analysis. My thoughts on dollar yen. Okay, the first question, dollar yen. Let's see, maybe we can find something and trade dollar yen. Oh, this looks like a good opportunity to potentially short dollar yen. Yet again, market is waiting for FOMC. Market is waiting for FOMC. You had a break of master candle range. You see, this is basically a range. This is a range, but yet again, let me see something. Okay, this is the high. Here, this is low, although we can use this swing too. Wow. Watch this. Rejection from this confluence zone. Yeah, I'm thinking about the potential sell trade here. Potential sell. Guys, I can afford now to enter really, I mean, with my risk and this account, I can do whatever I want to without a single sweat. That is how you should also trade. Agil's current trade is pound dollar buy trade. Here, stop loss is there. TP is here. My stop loss is 29.45. If it hits, okay. If it doesn't hit, even better, because my risk to reward is slightly, not slightly, but much, much higher. For this trade, we might see a sell. This is mini head and shoulders. Very, very mini head and shoulders here. So the price has gone up, then made, yeah, it actually made a nice rejection from the top part Until then, really, this could be another good sell opportunity. Okay, let me think. This looks tempting because price stop loss would be 12.10. Again, very, very good potential trade. 12.10 would be a stop loss. So the only thing is it broke through this master candle range. It could be a fake out because of this pattern here that showed up like a mini rooftop, a mini rooftop, very mini head and shoulders. And if we sell it, the target is 11. Or this could be a pivot target. Here, this is the target zone because this could be a counter trend trade. Okay. Okay. Okay, sell. I sold dollar yen. Very, very easy to see. I will put my stop loss 12.10. I will wait to see whether it will hit something before FOMC. Stop loss is 12 plus the spread, so 12.11 is my stop loss. Yeah. Okay, stop loss is there. My final TP is, well, this could go even, but if this is bullish, this is counter trend trade. So 11, let's say 11.45. 11.45. Let's see. Whatever happens, guys, I'm again with a very low risk here. I have two trades open, 0.27, 27 lots of risk, so it's not big risk. Really low risk, guys. Keep your risk under control. Aim to be less than 2% of risk total. Don't go with more than 5% of risk. You will be in danger then. Pound. So two trades at this point. Two trades at this point. Live trades. Dollar yen sell trade. Pound dollar buy trade. Yes, we have bullish divergence indeed, Mihai. This is bullish divergence here and there. Here and here, bullish divergence. See, the price is, yeah, I mean, even here, let me just check this low. I will correct myself now. Here, this is divergence. You see, this spot and this spot. You need to align. You need, guys, when you chart divergence, always align your candle with an oscillator. So I'm teaching you now again about divergence. This is bullish divergence here. You see? And you need to align the indicator with an oscillator. You need to align candlestick with an oscillator. They need to overlap. Okay, they need to overlap. It's very important for you to understand. Okay, a lower low on the price and a higher low on the oscillator is called bullish divergence. We have it here, there, and there. See? Easy to spot. You don't need indicator for divergence. Learn it harder way. It's always best to learn something harder way. And I'm okay when indicator shows me something. Because it just tells me, okay, Nenad, pay attention to this. And then I pay attention. But I don't strictly rely on indicators to even show me something simply because I want to be sure myself. The first thing is I want to be sure I want to make sure that it's what I'm seeing. I'm seeing a divergence here. I'm seeing a rejection. You see, it's trying to go down, but my stop loss is here. The only thing what I don't like is market is not moving at this point. It's a bit up and down. Simply it goes up and down, up and down. My risk for two trades is very small. I have 0.27 lots open. And if I lose, I will lose less than 2%. That is how you need to calculate, guys. It's not like you open a full lot and then pray that it will go your way. Let's wait. Maybe we will also see a trading opportunity kick in. As long as we are under 2 or 3%, we are okay. As soon as you cross 5% risk threshold, you're out of the game sooner or later. So let's wait. Let's see. The only thing what I will do is, and that will be my final trade for this day, of course, is to keep this trade sell limit until FOMC. That is what I will do, definitely. I will be keeping my sell trade, my pending sell trade on euro dollar, even on a FOMC. Now the price definitely went down. It's trying to reach my stop loss, and it hit. It was, you see, it was a break to the lower part here. Only 15 pips is lost, and the risk that I used was 0.4. Very, very low risk, 0.4%. Now you see, it's here. It's trying to get there again. Let's see what will happen. It could reject. I sold it at 111.87. Again, you need to learn that your stops should be respected, and your losses, you need to leave your leave your profits running and cut your losses. How do you cut your losses? Only by using proper risk management. So I am not moving by stop loss. I will leave it here. Perfectly, I will leave it here. And if it hit, okay. If it doesn't hit, even better, it will move in profit. But at this point, something that's happening is dollar yen is going up and euro dollar is also going up. So what I think this now is a clear profit taking from both parties, because obviously investors and traders are de-risking ahead of FOMC. So that is why we need to apply lower than usual risk. Don't get me wrong. From time to time, I can also allow to risk 5%, 6%. Sometimes because I trade professionally, I can risk even 10%. But the thing is when. The main question is when. Only when I see that market is not that in a that big of a risk. And at this point, a market is it's not moving like I would like it to see. If dollar yen is going up, the euro dollar should drop, but it simply doesn't drop. It tells me again that this euro dollar really is getting rejected from this spot. Now I would tell you, let's sell euro dollar and put a stop loss at 12. This could be a swing trade, 12.50, and try to get it to 10.80. But the thing is FOMC. The only thing is FOMC. So again, I am a bit careful with this. I have a dollar yen, so until I see what will happen with dollar yen, I might decide not to trade euro dollar before FOMC and leave this pending order. According to the risk portfolio of this account, it allows me to make even one more trade and still keep it below 3% of total risk. So it means that I can make a euro dollar sell trade with a stop loss at 12.50 and 1.10 lot size, and even another trade. So guys, it's everything is about the risk. You see, euro dollar is rejecting at this point. So yeah, I will use this opportunity to sell a euro dollar now. Here, my stop loss will be 12.50. Okay, my stop loss will be 12, or maybe I can, let's see, 12.50, and then I will remove this sell with this pending sell. So yes, I'm in this trade. Okay, and definitely now I will place a stop loss on euro dollar is 12.51. My TP is 10.8. Let's see what will happen. Okay, it's clear now. Again, sold euro dollar at 11.85. Let me move this so you can see it clear. And I will make a stop loss at 12.51. Let's see this trade. I would like to see something happening before FOMC, but if it doesn't happen, we will not grieve for that. So 12.51 is stop loss. Very clear, guys. Very clear. Let's see what will happen here. I will also change the slide here. I will change the slide. So here I will say market order instead of, give me a few seconds, and I will change it. So euro dollar was market order. I really expect weakness below 11.80. So if it drops below 11.70, if it drops below 11.70, even better. So market order. So this was dollar yen. Okay, dollar yen. We have market order and we have sell 11.84, 85. Stop loss is 12, 11, 2.11. TP is 11.40. And we have euro dollar trade. Okay, euro dollar sell market order. Sell market order is counter trend trade on euro dollar 11.85. Stop loss 12.51. TP 10.80. Even lower it could go, but there is a cluster of support. So yeah, this is it. Okay, 11.85 market order, and this is clear. And here, this is what we currently have. Low risk, keep it low risk, guys. Try to make your risk under 3%. Try to do it. It's important for your overall account, really, and for your overall trading experience, of course. The question, can we buy pound dollar? Obviously, pound dollar is going to Monday POC, so I will leave it at this point. I'm not buying pound dollar at this point, so I will leave it. It needs to obviously correct a little bit deeper. So yes, I will leave pound dollar trade setup. I'm not trading now pound dollar because the price hit 15 pip of a stop loss. So that is what I want to avoid, of course. Definitely, the price is making some movement now, but as I presumed, it's a bit rangy. So we might see some uh, volatility before price moves, as I would expect in my direction. The only thing what I would do is to let you know I will keep this trade on FOMC, really, this euro dollar short trade. So if I don't see anything substantial, at least I want to see 1.113020 on this trade. It would ensure like 60 pips. That is good, or at least 40, 50 pips, because the ATR is 80 pips. I want to get 50% of ATR. ATR is 80, so getting 40 to 60 pips is okay. If it happens before FOMC, I will probably close my trade. If you made an entry more than 0.10, you can scale out and put your stop loss to break even. But my risk here is very low, guys. Here, stop loss is, I allowed a little bit higher stop loss. And you see why my stop loss for pound dollar was actually very good. Because if I put a stop loss of 30, 40 pips, I would lose double. I only lost 15 pips here with 0.4 risk trade. Very, very, very small risk, guys. It's simply very, very manageable. Very manageable. So that is why I'm saying keep your risk under control. Make your stop loss. You need to know where to place your stops. Even if you're stopped out, it won't do you any harm. And I will leave this trade until FOMC. So let's see. I expect it to give me some profits. So let's wait. Now I will cover a few questions, then we will call it a day. What about the gold? Gold was a good sell, but now at this point, I think it could be sold again. You see it's making a range, a rectangle range movement on intraday time frame. So what I would do here at this point, I would probably go for another sell on rally. And if it's correlated as it is on euro dollar, so it could drop again. So I would go with sell on rally. Vito is asking about Australian dollar. Australian dollar. So let's see. Australian dollar is sell on rallies. You had a nice POC zone here. Left shoulder had potentially right shoulder. This was just a fake out. See, this should drop and price could go even lower. This was a POC zone. Very clear here POC zone. So it should proceed even lower. Now at this point, dollar yen is going back in my direction. And yes, I'm waiting to see what will happen with this dollar yen trading opportunity. Totally relaxed, guys. Waiting to see something. I sold dollar yen 111.87. Stop loss tight 11.12.11. I sold euro dollar 1.85, but my stop loss is higher, much higher, 12.51. Swing trade on euro dollar, going for 10.80 or at least 50% of ATR for some 40 to 60 pips of profit. So let's see. Let's wait. Pound dollar was stopped for 15 pips on this live trading webinar. 15 pip here, but as I say, nothing to be worried about. It was a small trade. Actually, it was 40. Yeah, it was like 20 pip of a stop, but it was a very small trade, so it's very, 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 very low risk trade. 0.4, it was 68, 40, 23 pips of a stop. Originally, it was 15, but then when I entered 68, it was 23 pip of stop, 0.4, sorry, 0.4, yes, risk was used. Yes, I really think that euro dollar could proceed down. This is a good setup. So let's wait. Oh, yeah, Balai is saying, would be great if you could do more often. Will boost my confidence. Great to know. The point of live trading is also to see how you can really trade. We always do on live trades, we make profits. Sometimes we have a loss. This was really the first loss on live trading session. But you see, when you have live trading rooms, everything is very clear, easy to see, and really totally stress-free. You need really to make everything you do in your life stress-free, at least to try to exploit uh, stress-free setups. You can only do that if you trade with low risk. Until you learn how to trade with low risk, everything will be futile. Okay, euro dollar is going in our direction now. Definitely going in our direction. That is good to know. I will leave this trade going for 40 to 60 pips. Let's wait. Let's see what will happen. But I expect this to go in some profits. The Quinal 3 times per week. Well, at this point, I really don't have time for that, but maybe in the future. Uh, yes, Nick, from my webinar, it's buy. You can maybe try to go with a buy trade. It's at, yes, it's in the POC from my live webinar. You might do it, but please, if you're in profit, ensure your profits. Please do. Final question. Can you say something about euro yen? Euro yen, I'm not, you see, it's a range. I don't see anything particular here. What I see here is simply this. This is a pennant. It looks like a bullish pennant. If it breaks out, you can do a breakout trade. But if it breaks down, it could probably drop here and then maybe spike up. So currently, guys, 2 trades running, and we will call it a day. Euro dollar is our entry point, 1085. My stop loss is 1251. I'm keeping this trade until FOMC. Very low risk trade. And also dollar yen trade, 1187. Entry TP 1145. Stop loss 12. Sorry, yes, 12. 1, or let's call it 112.11. Okay, guys. So let's see what will happen. I'm leaving these trades, of course. Of course, I will leave these trades until I see something happening. And let's see if they will make profits. And of course, I will see you soon tomorrow with Chris, and expect, of course, new analysis soon. Let's see what will happen. Cheers, guys. Have a great day. Trade safe. Talk to you soon.